if I can, so this is the 5 minutes. So this is the area I want to focus on. Is kind of this rotation here, this extension of the daily low, and then the kind of reaction we get afterwards, and then kind of how after this I sort of realised we're going to probably balance for the rest of the day. So if I just bring up my profiles from this day, so from this day here, I mean, so basically this was the profile which I was talking about. This was basically the high which we failed at, the 57s. We kind of traded up towards 55s, I believe, 50, yeah. And yeah, then we offered, and somewhere within here, this belly of the profile, we kind of had a print, the W print, extend the low and bounce. And for me, my kind of premise was that I really like the shape of this current profile, but so I mean, I like the shape of everything and kind of how things set up, but I wasn't very disciplined in understanding what kind of price action I wanted to see. If this market is now going to kind of really knife through here, and in order for the market to do that, I mean, the energy has to be quite, it has to be quite strong. Just based on the fact that how cleanly auctioned this is, I mean, it's very, very smooth. I mean, you had this kind of steeper drop off from the day, but we had that kind of auctioning out sort of tight sideways price action, you know, very slow lethargic price action, which kind of followed for the rest of the day after this low was made. I mean, if you were to have split this profile, this would have been a lot skinnier in size, and the energy in here was kind of a lot more high, you know, high volume, and energy was a lot better until we extended the low and came back in, and then the whole book kind of died, and it kind of was dying down here. But I was quite fixated on using this strategy, which I like, and it works, but in the wrong context, when the energy kind of had to be high and really punchy through this kind of the balance of the profile, the kind of midpoint of the profile. It really needed to kind of leave a print, you know, somewhere down into here. If, you know, say if you were to kind of imagine that, you need to see, you know, really high energy kind of, you want to see a good sort of reload on the offer, but you want to see clips into the bid as opposed to kind of clips up, and our offers being pulled, which is kind of what we saw. You know, we saw a lot, which I'm going to show you now. If I bring up my ladders from this day, so basically the main premises of the strategy, which was, I mean, it was a wrongly implemented strategy, but sometimes I find when the Bund kind of trades into these trades into profiles, or kind of down towards you know, after coming off highs and doing kind of intraday sort of reversals, I do find that the market can sometimes continue the move, but it kind of does it in a very flippy and churny manner. So as we kind of see here, my whole premise of trying to execute this trade was to kind of be quite passive initially, and what I want to see is the market leaving constantly poor lows as we're kind of trading down. So as the market's sort of trading lower, we're seeing, you know, we're seeing the market kind of get offered, and, you know, churn lows, then it will kind of maybe flip up 5 or 6 ticks, rotate kind of higher, and then kind of resume lower again, and it will kind of do that. It can do that for quite a while, and I found it quite useful, a useful way to execute, because, you know, originally I would used to be selling all these aggressive lows on the kind of, you know, what I deemed was quite kind of good price action, but in reality it's just a lot of kind of two-way churn, which then kind of gets flipped higher, and liquidity is found at higher prices before pushing back lower again. So the way for me executing this trade was passively, but my whole idea was wrong in the sense that this had to be kind of high energy, high reloading, high, you know, clips down, as opposed to kind of pulling of offers and clips up, which we're going to kind of see now. So and as initially we kind of do get that kind of reaction which I'm looking for. We're kind of seeing the market churn lows. Lots of lows go offered. I have this playing at 1.5 speed, which I think is probably best to have, because it is quite slow. But that's the kind of, which kind of goes to show the conditions which was not right. So as you kind of see, everything, like the lows are churning and going bid offered, and notice how we can actually down tick the ones now. So we down tick ones and we go bid over 2s, 3s. I'll play at regular speed from now. But so for me, my kind of trade in this point is kind of come into question in terms of this. Are these the conditions right? I mean, this low should have ideally for me kind of been left really poor, but it wasn't. I mean, it was. I mean, the trading in here was, you know, it was quite high in volume. There was definitely kind of interaction here between buyers and sellers, but then there was a very clear reaction off the lows from 01s to 05s. That whatever selling was taking part here is kind of, is sort of dried up in the short term, and you haven't got really an edge in the fact this is a bad low. So for me, I mean, this low really needed to kind of be left poorly, but we didn't. We traded very quickly. There was a lot of pulling on the offer as well. I mean, you kind of saw that going into the low, and then once the low was made, it then really did kind of reverse quite quickly. So for me now, I mean, having offers in like I do here, I'm not completely against it. When you have this, say if this was kind of an edge, like for me this isn't an edge in this low, especially given the shape of the profiles, which I'll just bring up again quickly. So I mean, this is the low that we've actually just put in now. For me, this print needs to be trading down here. I wasn't thinking this at the time, but this is where the market should be trading if this is really going to punch, if this is really going to have any kind of meaningful move lower. And this, because I mean, you got two really cleanly shaped profiles in terms of how we've auctioned. I mean, bear in mind, yeah, this is after we've bounced and kind of rotated back into balance, but the premise of this trade, like this was a much skinnier profile, so therefore if this is kind of going to kind of push out of balance and kind of push the lower prices, energy at the extreme of this market should be really high, kind of high pace, kind of high frequency. It should be kind of the same energy you saw on the comment really, and progressive at lower prices. So I'd like to see it get more aggressive as we go lower. In this scenario, we did the opposite. We got less aggressive as we went lower, and we kind of eventually, in reality, it actually turned quite aggressive going higher. So yeah, for me, I mean, once we kind of in this scenario, the way I'd like to trade this is, if I was in the right strategy, was to kind of, I want to like get filled in on some and then pay it and then kind of scout and then I kind of trade out of some and so on and so forth until I can kind of work a good price, I feel, where the market will then continue. But I was very one-dimensional in my thinking here, and I wasn't really I remember watching this when I kind of actually got out the trade originally, that I was like, okay, there was actually no one hitting bids the whole time. And I remember on my debrief I writing how, okay, yeah, there was one of the criteria, i.e. there was a lot of reloading on the offer. There was a lot, but as we kind of trade up towards how far we trade, I just wanted you to pay attention as to how little interaction there is on the bid in terms of people, sellers selling at market. So this is what I kind of mean by the churn, which is seeing, you're seeing a big churn on the offer, but notice how small the clips down are, sort of thing like that, very small. Notice the bid then instantly kind of reloaded, just kind of stacked, whereas on the offer we're kind of seeing a lot of kind of skinnier offers, sort of thing. And then I just wanted you to pay attention to how much trade. So literally only 27 lots trade at 7s, takes a bid, 8s gets pulled again, 53 lots trade into 8s, and 26 lots trade down. So I mean, for me, in terms of like just in the short term kind of interaction of the market, there's kind of very little sell side aggression in terms of actual like initiative. I mean, there's only kind of clips going up in terms of relative size, and then any clip that goes down, the bid is kind of stacked again straight away. So we see 174 lots trade into 6s, instantly 250 trade up, we start to reload the bid, 360 trade up, reload the bid. And I mean, if this is kind of, I mean, this can make sense to you at the time as to why you're doing this kind of stuff, but in reality, if the market isn't showing you, you're kind of missing the kind of concept of how you should have been positioned initially, which was, looking for an aggressive initiative break lower, at lower prices, i.e. selling lows, expecting the market to kind of break from balance, whereas now you're kind of, you're sort of participating in an area where the market could turn from here. I mean, you never know if it's going to turn at any point, but in terms of like having an edge you can lean on to kind of skew your probabilities for that to happen, now it's getting less and less, and as you kind of see, any liquidity that is actually trading into the bid is being completely absorbed. Again, 36 lots trade up to 8. I mean, when the market actually does start lifting and trading higher prices, it really doesn't take a lot for the market to go bid over, which is not what you want to see if you're looking for this kind of this bid to kind of fall back and sort of trade towards the lows again. Because the further this kind of goes higher now, the kind of more inventory you're going to start seeing on the bid, the more liquidity is actually going to start moving to the bid as opposed to kind of the offer, which is what we're seeing. After we've made that low and kind of bounce sort of thing, anyone who actually was selling, for example, 2s, 3s, 4s, when it was kind of aggressive in here, when we were breaking that low, if they haven't paid up already, I mean, they're already, they're quite, they're really thinking to themselves, okay, right, well, at what point am I not wanting to be in this market anymore? And you have also people like myself who are selling into this bounce. You may be thinking the same thing as me, and this is what I mean. It kind of all adds again to the liquidity on the bid, the inventory on the bid, as you just kind of see the constant reloading. And it never really gives you that kind of signal as to that this market wants to turn around in terms of, yeah, because the thing is that once you make a low like that and there's no kind of initiative in the direction of the original move, well then the market's kind of just going to revert back to balance, in my opinion. This all kind of comes down to understanding when the market was trading down here what you wanted to see. And I didn't have an idea of what I wanted to see, but I wasn't very aligned as kind of what should have been. It wasn't very true to what I thought should happen. So and as you can kind of see, I do realize this, and I'm trying to get out for a small loser and a bit of a winner or whatever like that. But this is kind of thing, when you're wrong and it's like this, it's very hard to then kind of, you need to, I remember this market then ends up trading quite a lot higher, and I think and then I'm kind of stuck in a position which just really isn't the right trade. And now and then, like I said, if you go back and watch, go on the chart, this really can just squeeze. It does. It ends up squeezing all the way back up, and that was the low of the day. So and as the market goes higher, the move gets kind of more aggressive and it gets more painful. Trying to get out becomes harder, and I've mentioned this before. Like, a good sign as to why this was not working was how hard it was for me to get filled on the bid when I was offside, if you see what I mean. And this is kind of the testament to, again, like I said, the kind of liquidity on the bid. It kind of gets worse and worse and worse as the market pushes higher after trapping people short. So this was kind of really important, and for me it all kind of came down to the if I just put it up again, the original shape of the profile. Like, it didn't constitute a move. Not that it couldn't have done, but the fact that we had we had a hawkish comment. We didn't extend the low on the hawkish comment. We then bounced, and then when we did extend the low on the hawkish on post comment, when we weren't printing down here, when we weren't trading down here with energy and volume, it was always going to be hard for this market to kind of bounce into here. It was always going to have to do one thing, or return to balance. And the price action never really constituted it, extending the range and trying to find new value, any kind of promoted mean reversion. And the thing is, once you have more people positioned here, against that sort of trade, the more aggressive it becomes in terms of short-term bounce. And the short-term bounce was really nasty. It bounced off the lows. It bounced nearly 15 ticks. Nearly 15, 16 ticks. So you were kind of you had to be really clear as to what you were trying to achieve, and when you're trying to achieve that, okay, right, are the conditions there in order you to do that? And in this scenario they weren't. So this is just kind of something that I thought was quite good to come back on.